And the amount of Bitcoin that's going to be created at current prices is something like 70 billion. Now, of course, gold and Bitcoin can change in price to accommodate more inflows if people want to put more money into them. But the point is basically, if you're just kind of saying, what do I want to own that's pretty scarce? Obviously, good equities are one of the options. Good real estate can be one of the options. Art is historically one of the options, especially for wealthy investors, but also Bitcoin is because it's liquid, it's fungible, it's portable, and it's got a lower kind of new supply growth rate than a number of other kind of liquid investments. So I think from an American perspective, it's often viewed as an investment, whereas in other countries it could be viewed as a lifeline.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. In the Bitcoin and cryptocurrency community, Lyn Alden is a well-respected macro analyst, and financial strategy has a rare background in finance and engineering. She is well known for her brilliant understanding of macro issues and how they affect asset prices and the overall economy. She is also known for her ability to present these complex issues in simple terms that anyone can understand. Her appreciation of blockchain technology and Bitcoin technology is immediately apparent in every interview, tweet, article, and interview. Her work on the global macro environment is even more brilliant in her 2023 book, Broken Money. Why our financial system is failing, who we are, and how we might improve it. Allen explores the broken nature of the global financial system and shows how it quickly enriches the top 1% of earners while impoverishing billions of people. Alden also emphasizes how, in spite of the abundance of energy and technological advancements of the modern era that have greatly improved our lives, our monetary system is still antiquated and problematic. Despite humanity's accomplishments, including walking on the moon and many medical breakthroughs, we are still burdened by a debt-based fiat system that has a track record of failing. An excerpt from the back cover of the book says, "With the exception of a small number of the most valuable ones, most currencies rapidly lose value over time and are not widely accepted outside of their own borders due to various cross-border frictions, bottlenecks, and currency conversions. There are currently over 160 different currencies in use worldwide, each with a local monopoly over its own jurisdiction. Saving money is made more difficult than necessary by being born in the wrong nation, as the global financial system is essentially a barter system in this sense. Although weaker currencies will eventually collapse, and today's strong currencies will become the weaker currencies. Lyn Alden contends that the US dollar and other major currencies still have significant value relative to these weaker currencies. In such a scenario, the US dollar may have a similar fate to the bolivar or the Lebanese pound, which is why sound money proponents like Alden think it's time to update our antiquated monetary system. They suggest switching from a debt-based, inflation-prone system to one that prioritizes decentralization, scarcity, deflation, and smooth payments via a strong digital network. Naturally, Bitcoin is the top cryptocurrency, and it meets all the requirements. Growing global acclaim in addition to the extremely depressing macro environment at the moment. According to Alden, the world and the US are getting closer to a time when Bitcoin will become the norm. During this time, the price of crypto assets will rise even more sharply, and there will be a massive surge in the use of Bitcoin worldwide. We will play snippets from Alden's recent interview on the Prof show, wherein she shares her opinions on stablecoins for Bitcoin and the cryptocurrency market as a whole. And lots of things Lyn Alden discusses, so please watch the video to end and share this video and subscribe our channel Everyday Finance. Thanks.
Sure. So one of the attributes of money, it's that which you hold, even if you don't intend to consume it yourself. That's kind of historically where money kind of came from. And so, for example, if we hold a gold coin, we're not necessarily intending to melt it down into jewelry or industrial use anytime soon, but we're kind of holding it knowing that it's a useful thing that other people use.
Store of value.
Store of value. And as an American, to your point, we generally don't find ourselves troubled for payments or even troubled for savings. We have no shortage of savings vehicles that are reliable. But if you kind of view it as something that could be useful for billions of people around the world. Something like half the world lives under shades of authoritarianism, half the world lives under kind of persistent double-digit inflation and multiple, hyperinflations within our lifetime. Bitcoin is something that Americans often treat more as an investment, and it's one that happens to have outperformed the S&P 500, the Nasdaq, almost everything other than Nvidia over 3, 5, 10-year period. So for us in America and Europe, it's often seen as an investment, which I think makes sense. But in, say, Africa, where there's roughly 40 currencies, or Latin America, where there's roughly 30 currencies, and every one of those currency borders is a friction, most of those currencies are undesirable to hold, is something that's useful to them. And that therefore it is an investment for people that kind of understand that there is a use case, even if the use case doesn't apply to them. And like America, I do think that we are running this more structurally high inflation because of the things we talked about earlier in this discussion. But that doesn't mean they have to happen super quickly. It doesn't mean that things have to end. If you kind of do the rough math, I mean, Congressional Budget Office expects 20 trillion in net treasuries to be issued over the next 10 years. They also assume no recessions. So if there's recessions, that number is probably going to be higher. They generally undershoot the numbers. But let's say conservatively, 20 trillion in treasuries are going to be issued. If you look at how much, gold's going to be mined over the next 10 years, at current prices, it's somewhere in the ballpark of 2.5 trillion. And the amount of Bitcoin that's going to be created at current prices is something like 70 billion. Now, of course, gold and Bitcoin can change in price to accommodate more inflows if people want to put more money into them. But the point is basically, if you're just kind of saying, what do I want to own that's pretty scarce? Obviously, good equities are one of the options. Good real estate can be one of the options. Art is historically one of the options, especially for wealthy investors, but also Bitcoin is, because it's liquid, it's fungible, it's portable, and it's got a lower kind of new supply growth rate than a number of other kind of liquid investments. So I think from an American perspective, it's often viewed as an investment, whereas in other countries it could be viewed as a lifeline.
On the social media site X, Bitcoin has been experiencing a prolonged period of futility among sideways trade at the $65,000 mark. This prolonged level of FUD is unusual, according to data from the cryptocurrency analytics platform Simon, as traders continue to give in. In a June 20X article, Santaman stated that FUD stood for uncertainty, fear, and doubt. The population is primarily afraid of or uninterested in Bitcoin because prices range from $65,000 to $66,000. In addition, over the past week, the price of Bitcoin has fluctuated between highs around $67,000 to $94 and lows around $64,800, according to CoinMarketCap data sentiment. This metric measures Bitcoin mentions on X and compares the ratio of positive to negative comments, remaining negative since May 23rd at the time of publication. It stands at 0. 738, indicating that Bitcoin mentions are primarily negative on X. However, positive events for Bitcoin, like the approval of 11-spot Bitcoin exchange, traded funds on January 10th, and the price of Bitcoin on April 20th, saw the indicators spike to positive levels of 4.49 and 2.35, respectively, negative sentiment toward Bitcoin on social media. Since the hoeing glass, Bitcoin has been on a plodding 150-day downward journey that is now about 60 days old. In a June 19th post, No Chief Analyst James Check, often known as Checkham, described the past few months of sideways price activity as the most dull time in the bull market. Pseudonymous crypt trader Gel noted that while Bitcoin is currently relatively boring, some analysts think the protracted stability may be paving the way for a sharp price increase on June 13th. Cointelegraph reported that Bitcoin was in its longest period of consolidation at 92 days at the time, with analysts speculating that the prolonged steadiness may be preparing the asset for a massive upside rally. Meanwhile, pseudonymous crypt trader Don Crypt Trades wrote that another cryptocurrency market sentiment gauge, the Fear and Greed Index, is showing a greed reading of 63 at the time of writing down 11 points over the previous days. This metric also takes into account sentiment on social media and evaluates other factors. market domination, volume, and momentum, as well as current trends, let's get back to Lyn Alden interview.
Yeah, so basically the rule set of Bitcoin is distributed among the people that run nodes. It's open source software, and so it's built into the code since inception. So every approximately 4 years, the amount of new Bitcoin that's generated every 10 minutes gets cut in half. So it's not that mining just one day shuts off. It's that mining starts out at a certain pace, and over time it asymptotically approaches 21 million. So back in April, the amount of new Bitcoin created every 10 minutes got cut in half, and approximately 4 years from now it'll happen again. And at this point, as of this latest halving, the annual supply inflation of Bitcoin dropped below 1%, which is approximately half that of gold. Gold generally historically grows at estimates of something like 1.5 to 2% per year in terms of supply. The typical developed market currency grows at 6 to 9% per year, outside of extraordinary years. Emerging markets like developing countries, they typically grow at double-digit currency supply growth over the long term. And so among fairly liquid monies or money-like assets, Bitcoin is now a very slow-growing supply. So I view it. I think the total addressable market's still notably higher than it is now. I don't know what it's going to do over the next 3 months, but yeah, I'm bullish with say a 2-year view or a 5-year view, or potentially a 10-year view. I went through a long phase where I was pretty skeptical on the asset. I was like, well, what if another currency is going to be better, or what if the whole space gets so diluted? But once I saw the network effects really form, once I delved into the technology and why it's designed a certain way, ever since really early 2020, I've been pretty structurally bullish on it, and that really continues to be the case. Over 4 years later.
Michael Saylor, the co-founder of MicroStrategy, has already presented Michael Dell with a Bitcoin proposal, saying it symbolizes the paucity of digital resources. This comes after the CEO of the massive US computer company, Dell, recently sparked enthusiasm among Bitcoin users with his social media statement on Thursday about how scarcity drives value. Dell word on X's mysterious social media post, which appeared to allude to Bitcoin's fixed supply limit, sparked conjecture among cryptocurrency enthusiasts over what motivated the 59-year-old billionaire to make this claim on his account. Although he believed that blockchain, the technology underlying the biggest cryptocurrency, was underappreciated, Dell had previously stated that he was not interested in Bitcoin. It will be interesting to see if individuals like Saylor can persuade Dell to change his mind about Bitcoin in 2020. Saylor and Tesla had a casual social media exchange. Elon Musk persuaded Elon Musk, the CEO of Tesla, to purchase the biggest cryptocurrency. Notably, in 2014, Dell began to take Bitcoin, making it the largest retailer to do so. However, in 2017, the computer giant abandoned Bitcoin due to poor demand, as it had been ineffective as a form of payment. As a store of value that primarily rivals gold, Bitcoin has rebranded itself, but not everyone is buying into this story. As a social media user noted in response to Dell's tweet, scarcity by itself does not produce value. We also need to keep in mind that all value is subjective. This is a common talking point among gold bugs like Peter Schiff, who think that scarcity without utility is pointless. If you learned something from this video, then please like this video and subscribe our channel, Everyday Finance, and we will meet in next video. Thanks.